presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing's great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
Listen, I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
again.
Thank you.
Now, Tom O'Brien.
What's going on, folks? This is Jacob filling in for Tom O'Brien today. In honor of his show, we're going to read through some of the cards he has here. So this one says, you are never responsible for the actions of others, but you are responsible for you. If someone is not treating you with love and respect, it is a gift if they walk away from you. You may hurt for a while, but your heart will eventually heal. And we all got to know our worth, everyone. So today, as Dave was saying, low volume. We're kind of trading sideways. A lot of the indices, the Q's down 0.79. Gold's down just a little bit. The dollar's up a bit. One of the big things that I saw is Lyft just taking the absolute L today. They had bad earnings yesterday. Massive volume dumping down here. Lyft shares fell 24% during after-hours trading after issuing weak guidance in its earnings report on Thursday. It's interesting, too, because Uber kind of knocked it out of the park, but Uber's down a little bit as well. Obviously not down 35%, 36% almost. So some of the key numbers here has a loss per share of 74 cents. Revenue was 1.18 versus 1.16 billion. Lyft said it expects to make roughly 975 million in revenue in the fiscal first quarter of 2023, lower than the 1.09 billion analysts anticipated, according to some analysts. So, yeah, bad time to be a Lyft investor. The Uber downturn, this had a pretty big run-up on, reports that they were going to beat earnings. A lot of the chat on a bunch of forums online was like, you got to get into this right now because they're about to beat it. And they did all right. You can see here some high volume. They're in a kind of a better situation, obviously, than Lyft. In other important news, the weighting for the CPI is going to be altered. So with Reuters today, the U.S. monthly consumer prices rose in December instead of falling as previously estimated. And data for the prior 2 months was also revised, which some economists said raised the risk of higher inflation readings in the month ahead. So what's going on here with this? Basically, according to Bloomberg, they are shifting weight. So one of the things that they're reducing is going to be some of these deflationary pressures. And that's mainly going to be used car sales, which the prices are going down. Remember, last year, and I even remember like in March of 2022 when I was in the market, it didn't make any sense not to buy a new car. Used car prices were so high. This has been dropping, and this is kind of dragging inflation a little bit. So they're reducing that, and they are increasing the component of owner's equivalent rent with a large weighting of 3.4%, and that's up from about 32.8%. So at the moment, the housing components are some of the largest drivers of inflation. Owner's equivalent rent rose 0.8% in December. So, what does this say for the market? Obviously, with like higher CPI, increasing CPI, this kind of suggests that we're going to have longer rates on the horizon. Greater rate increases for a longer period of time. That can be a little bit deflationary on prices in the market itself, certainly in the short term. But I think what their idea is with this is it gets a better idea of the really heavy players, right? So yes, car prices are deflating and lowering inflation, but focusing on these main drivers of inflation is massive. And so maybe gets a better idea of analysts on the Fed side to see what's going on to get down something like equivalent rent. They do suggest that on the long term, however, we're going to see these kind of prices decrease, and that will lower inflation. And so maybe targeting something that's like the heaviest kind of driver of inflation is super important. We'll see what goes on with that. But obviously for the short term, this is not great for the market. And it also makes you think, you had so many moves in the past, few months of last year, depending on this good CPI. And it turns out actually that there was a, minor increase, albeit minor, but an increase nonetheless. On the inflation note, China's factories prices fall as manufacturing struggles to recover. This is from Reuters. Producer price index falls more than expected in January. Consumer price increases slightly below forecasts, and monetary easing more likely than tightening. China's January factory gate prices fell more than economists expected, suggesting that flashes of domestic demand that had stoked consumer prices after the zero COVID policy ended are not yet strong enough to rekindle upstream sectors. The PPI was down 0.8% on a year earlier, extending to 0.7% drop the prior month, and faster than the 0.5% fall tipped in a Reuters poll, even though manufacturing activity returned to growth in January. So this is interesting a little bit. A little later in the show, the Chinese are huge on this kind of fabrication. A little bit later in the show, I'll touch a bit on Biden's speech the other day, talking about any kind of new federal programs regarding infrastructure will have to be made with American materials, essentially. Obviously, again, with the CPI here, this depresses bond prices because they want higher yields. All fixed income investments tend to lose value during this inflation. So, in the short term, I think we'll see a little bit of issues, but we'll see if the Fed was right. We'll see if the government was right in doing this. I spoke on this a little bit the other day when I was filling in for Tommy, but this Trafigura fraud continued to really interest me. So if you're not familiar, this is a Swiss commodity trader. I think they're based out of Singapore, but they're facing a $577 million loss through systemic fraud regarding the nickel trading. This nickel is widely used for batteries, and Trafigura has established themselves as a pretty big trader of this metal in the recent years, of really all commodities, but especially going into the battery sector. And they have just dominated with billions in revenue over the past few years. So they found out that the shipments that they were purchasing did not contain nickel at all. The reason this is interesting, or what got me thinking about this, is I was reading some other frauds as well, and big examples of people laxing on due diligence. And it's impressive, too, when you consider that this due diligence should have been completed, and the fact that it wasn't resulted in hundreds of millions of dollars of lost capital. Guys, we will be right back. Stay tuned.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, folks. So when before we went to the break, we were talking about the Trafigura fraud. So yeah, essentially 577 million lost. What happened is that the nickel wasn't there. This was done by a guy, an Indian businessman named Pratik Gupta. His company's TMT Metals and UD Trading Group. I think UD is based out of, or at least has a lot of their desks in Dubai. So some lawsuits are going on against them. Trafigura does ensure that its lenders that there's no exposure on their end and that lines of credit were not used to buy it. But it's again pretty insane. I'm not, I suppose fully sure how you'd be comfortable without doing due diligence on something like that. I'm reading that a full container can be roughly $500,000. So the amount of times that they had purchased these containers to reach up to something like 577 million, and then to find out that there's nothing in it is pretty impressive to me. Still, Trafigura expects its overall profit for the 6 months through March to be higher than the previous years, regardless of this loss. And like I said earlier, this company just reaps profits in the billions for the past few years. These guys are titans. So again, this got me thinking of what are some other larger cases of big companies not doing due diligence, and then it resulting in it turns out that the guys were fooling them. So something that stood out to me, especially in the commodity market, was a company called Briex, and I don't remember this, but maybe some of the viewers do. So it was about this gold mine in Busang, Indonesia. All right, and basically they were doing core samples to see how much gold was in there, and the amount that was there to be mined just kept increasing constantly through these years. And so what it turned out happening, it went something from 3 million troy ounces to something like 200 million, which is crazy. And so what happened is the chief geologist, apparently, among some other guys, were basically salting the core samples with gold. And this is pretty nuts. And this all started coming out. Their stock soared on this. And they started doing deals with Freeport-McMoRan, trying to get them into it. What happened is the head guy ended up passing suddenly in a very, very strange way. And some of this strange kind of, I suppose, behavior came out. Freeport-McMoRan decided to do their own due diligence on this before getting super involved. and found out that they were salting the samples. Prior to de Guzman, who was the chief geologist, salting the samples, it was like a 30-cent stock. And this soared all the way up to 250 Canadian, which is a massive increase. And so it's pretty insane to see something like that occur. One of the interesting things as well, that it makes you think, like, what are these people's like end goals, right? And are they looking at what the figures they're inflating and checking it against the real world? I mean, there was estimates after this that there was as much as 200 million ounces to be mined. And at that time, the U.S. Treasury Department had about 250 million ounces in its gold reserve. It's crazy. So I found that interesting. And I'm sure there's plenty of other, great stories from commodity fraudsters that just kind of leaves you thinking, like, how are people not doing their due diligence on this? Another one that was more recent actually was J.P. Morgan. Now, this doesn't have to do with commodities, but it has to do with a company called Frank. Initially known as Frank FAFSA, which that got shut down by the government pretty quickly because FAFSA is a trademark name. But the idea of Frank was it was going to essentially help students apply for student aid. Okay, it started by a lady named Charlie Javis. She went to Wharton, and she had been doing a lot of these, what's hip now for some of these younger prodigies is to do all these nice new startups, right, that make things easier for, let's say students, right? Or let's say, I think one of the things she had was help for kids in Myanmar. And it's all these new cutting edge kind of ideas essentially, but they're also hyper profitable. A lot of times, we've seen things like Theranos that this isn't true, or even WeWork, right? There's always some strange stuff going on. So what happened with Frank is Charlie Javis, she went to J.P. Morgan essentially and said she had 5 million students that she was helping, right? She had 5 million on their books. And so J.P. Morgan was like, right on, let's acquire this. Paid her $175 million, 35 per name, in order to acquire this, and then extended like $30 million to her if she would stay and kind of oversee this merger. So what they had done, so soon after the merger closed, the bank took its shot, all right, and reached out to the customer list with solicitations. This is what they would do to kind of gauge how many people would be comfortable, working with J.P. Morgan after this point. So 400,000 outbound emails went out, and only 28% arrived successfully to an inbox. So right here, this is super strange. A lot of these emails are just essentially bouncing. And this is compared with the usual 99% delivery rate, and something like, less than 1% even clicked on these emails. And so this is super, super strange. So this is super strange. J.P. Morgan decided to look more into it, and it found out that Charlie was completely manipulating the data that she had. She had hired a data scientist to kind of fool these people, and now there are like massive lawsuits going out against this. Now it's funny because there's a counter lawsuit on Charlie's part, basically saying that J.P. Morgan found out that they couldn't skirt some kind of federal laws regarding reaching out to these people, and now they want to sell back the deal. We'll see what happens, but it just, again, makes you think like this is a massive deal, $175 million, kind of really no question on it, right? And then bringing her on for $30 million over the next few years. In the bank's legal filing, they described this as totally disastrous. Diamond had some things to say about it as well, kind of deflecting some major problems that occurred with that. So, again, I would say even on an individual level, when you're investing in something, right, like it's so, one of the things I think we've seen recently is just hype driving so much price on everything. Even now, so many of these stocks, I feel at least, some of the big name ones that kind of, I don't want to say meme, but the ones that are on everyone's mouth are still extraordinarily overvalued, especially considering the position of the market. We are going to probably continue to see these interest rates increase, especially with with employment so high, and this only lasts for so long. So it's important, even in your personal life, to do due diligence on these companies. The technicals are great. Fundamentals are super important. You got to see what these stocks are doing. Guys, we will be right back. We'll talk about some sports betting, and we'll talk about some moves on the global scale. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks. So we have the Super Bowl coming up, Super Bowl 57. One of the big things going on here is sports betting. Also, the revenue from ads is going to be huge this Super Bowl. So it's just expected ad revenue of $650 million, which is nuts to think about because FIFA only brought in $200 million. And you kind of think about that, FIFA being much more of a global organization than the NFL is. This is an 11% fiscal jump, and all for 4 hours of advertisement, which is pretty nuts. So the average ad price, to give you a little insight on this, is about $6.5 million, and there's, which is new this year, multiple 30-second spots going for $7 million. And it truly is crazy seeing like the behemoth that is the advertising segment in America. The NFL brought in $4.4 billion in ads for all of its streaming partners in the 2021 and 2022 seasons. One of the big things, as I was saying, are the bets, right? And so this gets a little bit interesting. So if we look at some of these online sports betting companies, right, you kind of would expect, them to see like a big bounce. When you look at this, 1.2 billion expected for Super Bowl bets. Legal wagers on the Super Bowl growing up to 20% if that is reached. And we have 4 new states allowing this to go through. So we got more people added. I think this is Kansas, Ohio, Massachusetts, and one more in Maryland. So you'd expect, like, with some kind of, record ads coming in, but record potential for bets, you'd expect these to be popping a little bit, and they're not. In fact, on a broad range, except for MGM, which owns BetMGM, we're seeing them down about anywhere from 3.5 to 4%. And so it's a curious thing. Obviously, with concepts of like looming inflation, it turns out that sports betting may not be as recession-proof. And now I'm not saying a recession is definitely going to happen or anything like that. There is the talk, however, in the markets. And in the past, it could be seen that these were a bit recession-proof. It turns out that things like maybe scratch-offs or something like very low risk still are pretty recession-proof, but these guys are not. So, I mean, this is Flutter Entertainment. They own FanDuel. So you indirectly invest in FanDuel through Flutter. DraftKings down 4.2, Caesar down 3.49, and MGM doing all right. I remember, if I recall correctly, we were talking about MGM the other day. Kevin Hincks is going to talk about that on Fast Market. Let's see here. Pull something up for y'all. So yeah, let's read through a little bit of this, because this is pretty interesting. So with the expansion of legal sports betting, traditional Super Bowl wagers are expected to pass casual wagers for the first time ever. 30 million American adults plan to place a traditional sports wager online at a retail sportsbook or with a bookie, up 66% from 2022. 28 million plan to bet casually with friends or as part of a pool or squares contest, up 50%. So sports betting legalization is also driving fan interest in the NFL, as more than a third of NFL fans say the expansion of legal sports betting has made watching an NFL game more exciting. No kidding, right? Every year, the Super Bowl serves to highlight the benefits of legal sports betting. Bettors are transitioning to the protections of regulated market leagues, and sports media are seeing increased engagement. And legal operators are driving needed tax revenue to states across the country. Industry investments and responsible gaming continue to resonate. The majority of traditional Super Bowl bettors report seeing a responsible gaming message in the last year. Importantly, younger Americans under 35 are more likely to recall seeing a responsible gaming message. And this is really interesting. I had read a study a while ago. Let me see if I can probably get that pulled up for you in a little bit. Excuse me. But it was suggesting that a lot of the people who are betting in years prior were individuals making $100,000 a year or more. And it seems to be shifting. And not even from an anecdotal perspective, even though I do have a lot of friends that I know who are betting more on these kind of apps more than ever. But it's saying that a lot of these guys are making $50,000 or less and still betting in this. It's super interesting. I think one of the reasons we might be able to kind of parse out why these stocks are not, rebounding very heavily on this kind of news is, let's look at DraftKings, for instance. Like, DraftKings is still not profitable. And so what do you do when you have a company that's not profitable, but it has this nice kind of profile to it? And you really have to look at revenue. Still, what's strange is DraftKings made some massive revenue. Let's see if I get it. So for non-profitable companies, again, you want to look at revenue. And this is up 62% for DraftKings. I find this interesting. I haven't done the fundamentals on DraftKings, but it might be worth a look to see why this isn't getting more of a pump up. Sports betting The market has multiplied 10 times in the last 3 years to possibly reach $7 billion in 2022. More than half the nation can now legally gamble on sports. And in this upcoming Super Bowl, it's expected that 50 million Americans are expected to bet on the upcoming Super Bowl. It might be interesting to see. I mean, the last day with volume on this was November of last year. Pretty big downtick on it. You see it trying to get up. It's got a little bit of volume, but that was still on a down day. And you just kind of keep testing this last day with volume. Obviously, we've moved up a bit, but it'll be interesting to see what happens after the Super Bowl if this does get a pump. Regardless, it's quite interesting to see this grow so substantially in America. This is, relatively like a new thing. I remember being much younger, and sports betting was not acceptable. And so, I think, again, as this is coming through, check these out, see if it makes sense for you. If you already own it, revise what you got and see what you want to do. One of the big interesting news headlines is that will affect us, but mainly will affect Europe as well, is what Russia is about to do. And they are going to cut about 500,000 barrels a day, which is the equivalent of 5% of Russia's production, which is a 0.5% of the world's supply of oil. Alexander Novak, who kind of runs this stuff for the Russians, says that this is to help restore market relations. Quite obviously, this is I wouldn't want to say an attack, but a shift against the Western countries. This is a big punishment for them. The announcement comes days after the latest EU sanctions and other Western measures against the Russian oil sector took effect in retaliation for Moscow's full force invasion of the Ukraine, and just 2 weeks before the anniversary. So on this, Brent crude jumped 2.3% to $86.43 a barrel immediately after the announcement on Friday, having earlier traded largely flat on the day. When we come back, we'll talk a little bit more about this. It'll be interesting to see what happens. I think we've been adding more and more with some relative lull in price volatility back to our reserves. But still, this will be a little bit interesting to see how the market shakes out. Guys, we will be right back. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
All right, folks, so just to touch a little bit more on what we were talking about before the break. So, recap, Russians are cutting oil production by 500,000 barrels. Kind of in line with what OPEC has, the rest of OPEC, has continued to do, is they're not going to try to offset the cut that will be occurring because of Russia. So we are going to see some higher barrel prices as the time goes on. It won't be as extreme as, say, something like the beginning of the conflict, where you had something like $140 for a barrel of oil. But interesting nonetheless. Again, I've spoken about this probably months ago when I filled in. How this is such a major pressure for these countries that aren't energy independent, to kind of shift to something more like that. Traditionally in Europe, you had countries like France. First, let me just say, I'm a huge proponent of nuclear, right? And so you had countries like France who were getting quite a bit of their energy off of nuclear. That's reduced a little bit over the past year, but major energy consumers like Germany are kind of out in the water on this one. They had some plans in the past to try to build some reactors for themselves. They decided not to do that for whatever reason, and this is kind of the issue with it, right? The Russians have so much leverage over Europe, at least in the realm of energy, right? It'll be interesting to see kind of what happens regarding this, if there will be any real change in kind of rhetoric. I would suppose not. This conflict is, for the West, is not about resources like this. It is more of a moral thing. But yeah, so act accordingly, I guess, regarding what you want to do with investments regarding oil. We'll probably see some higher amounts. One of the things higher prices on the barrels for a longer period of time. One of the things I was speaking about earlier was about during the State of the Union, talking about how raw materials that are going in to building any kind of federal construct have to be coming to the U.S. Have to be produced in the U.S. If they're going to be used on federal projects. This is awesome. Let's take a look at some now. Let's take a look at some stocks that I like, at least regarding steel. Now, Steel Dynamics is carbon steel, which is not always used in stuff like that. But these guys are I love this stock so much. I got in at a great price, and they have just taken off substantially. I think something like, when did I get into this? Probably sometime around, last year, June maybe, last year, May. But it has taken off and is staying strong. And I would, just take a look at this stock. It's done very well. It was always kind of like the little brother to Nucor, but as we see, it's moved up substantially and really held. Now, all of this is nowhere near what its last day of volume was. But regardless, it stayed pretty consistent. And in my opinion, it's just worth taking a look at in general. Nucor itself up 0.29%, staying strong as well, kind of moving the same way, right? Like not touching back to its last day with volume, but staying pretty consistent up. You know, one of the things that's interesting, you know, especially in a period of increasing prices, is kind of what this legislation, you know, what that means for higher prices, right? Obviously, it's more expensive to produce in America, and so that might lead to obviously higher operating costs. But this is very much in line with a general kind of plan from the government it seems in a lot of ways kind of trying to position itself and make itself a bit more self-sufficient. And I spoke the other day with the chips and kind of the movement away from a larger a larger arena, back more like nationally into allies. And then also like regarding things like cybersecurity, where it seems like this government is really taking that kind of seriously. And so it's a bit welcoming, I would suppose, in a way, to see that, right? However, like I said, I do think that prices will go up overhead-wise on construction for this. Let's see what else we have. This is another interesting one. Again, more in line with what we've seen from these larger tech firms, is Yahoo is planning to lay off 20% of the staff, 20% of their staff beginning this year. So Yahoo will lay off more than 20% of its workforce by the end of 2023, eliminating 1,000 positions this week alone. Private equity firm Apollo Global Management acquired 90% of Yahoo from Verizon in September of 2021. The company had about 10,000 employees at the time. Axios reported that more than 1,600 workers would lose their jobs in the latest cuts, suggesting the company's current headcount is closer to 8,000 employees. The layoffs are part of a broader effort by the company to streamline operations in Yahoo's advertising unit. The strategy had struggled to live up to the high standards that Yahoo had across the entire stack. And again, we've spoken about this. Meta's doing it, Google's doing it, Snap, obviously. This was an interesting one that I read from Bloomberg. It says thousands of fintech jobs are gone in the first ever belt tightening, at least in its industry. Affirm Holdings Incorporated, a quote, buy now, pay later lender and online platform Upstart Holdings Incorporated, are firing 1 of every 5 of their workers. And other firms have made deeper cuts. They joined a bevy of fintechs slashing payrolls as borrowing has become more expensive. After several years, this is a quote, after several years of sky-high venture funding and more unicorn valuations than you can count on one hand, a lot of fintechs are being forced to mature and streamline more rapidly than they plan to, and job cuts are a quick way to do this. This is bound to happen at some point. Fintechs boomed during the early days of the pandemic, ambitious to grow and driven by low interest rates and consumer hunger for debt. Firms including Lending Club Corporation have seen earnings decline and shares slump since then amid slackening demand and Federal Reserve interest rate increases. Since the beginning of November, a company called Blend Labs Incorporated announced it would cut 28% of its onshore jobs. Plaid Incorporated fired 206 of its employees, and PayPal Incorporated said 2,000 workers would be dismissed. Stripe is cutting more than 1,000 jobs, or 14% of its workforce, and Chime is reducing its headcount of about 160 or 12% of its staff. So again, we see this same kind of pattern, something within 10 to 20% layoffs. Yeah, it's nuts. Let's run through it again. I think we hit all of these. Yeah, it's nuts too. One of the things that's interesting, obviously this is fintech and not necessarily just tech itself, but one of the interesting things is it's not just, we'll get back to this, but it's not just the interest rates that affect it. It's a lot of these tech companies, it's like discounted cash flow, right? And when you get these like increasing rates, that reduces the valuation of the company on the years out. And we're seeing a lot of these guys just needing to have extra capital coming in. Guys, we will be right back. Stay tuned.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV.
All right, folks. Just some quick news. Newmont is offering to buy Newcrest for the equivalent of $17 billion US. This is accentuating the industry's desire to consolidate, and this is real. You had, the Yamana Gold acquisition by Pan American Silver. You had the Agnico Eagle acquisition. It's interesting to see what's going to happen with these larger companies, with all these gold companies, and seeing if some of the smaller ones are just going to get absorbed. Obviously, Newcrest is not a small company. It's Australia's biggest miner. But it's interesting to follow kind of how gold's doing. Obviously, we get some depression of the prices with the increasing dollar. Something else interesting is Tesla is taking the dive today. It's doing a little bit better than it was earlier, but you're down roughly, something like 5%. I guess right now, 4.8%, but it's really taken a big hit today. And again, this was the thing I was saying earlier. I feel personally that this company is a little bit overvalued, and that investors aren't taking the true economic situation that we're going to be in for a long time. And I mean that in the sense of increasing interest rates, maybe not taking it as seriously as they should. Of course, does that really matter? The stock's still moving the way it does. Money is the thing that really talks. But we might be seeing a little bit of a sell-off after this like insane run that we had over the past few weeks. So it'll be interesting to see what happens with that. I would like to see some of the other electric makers kind of getting some more like exposure, obviously with like Ford, but you know, we'll see what happens along with that. Interesting enough, I was speaking about Russia earlier. ExxonMobil has popped up today on that, 4.2%. This is pretty nuts. We'll see it take out. Interesting thing about Exxon is they're going to start, I guess, trading. They have so much money. They made a lot of income, and so obviously this exposes them to more risk. But it should be interesting to see what happens. Folks, thank you for joining me today. I hope you guys have a lovely weekend, and we'll see you all Monday. Take it easy now.